Right, good morning, ladies and gentlemen. Welcome to this, the second meeting in 2014 of the Economy, Energy and Tourism Committee. Can I welcome members, welcome the Minister and his officials and visitors joining us in the gallery. And can I remind everyone, please, to turn off all mobile phones and other electronic devices, or at least turn them to silent so they do not interfere with the committee's work. We have apologies this morning from Margaret McDougall and from Dennis Robertson, and we are joined by Joan McAlpin and Jenny Manara, who are both here as substitutes. So welcome. Just before I turn to the first item of business, I'd just like to thank our committee assistant, Jonas Ray, for all his work. Jonas is leaving us. He's off to the Parliament's events team. He's not here, right? He has left us already. But Jonas is off to the Parliament's events team for a temporary promotion, so we'd like to thank him formally for all his efforts, including at the recent Business and Parliament conference, where he did a lot to do with the organisation, and wish him well in his new role. Right, moving on, item 1 on the agenda, I would ask if the committee are content that we take item 4 in private later in the meeting. Great, thank you very much. Item 2 on the agenda is consideration at stage 2 of the Bankruptcy and Debt Advice Scotland Bill. Now, I'll just run through, if I can, how we intend to deal with this. Everyone should have with them a copy of the bill as introduced, the revised marshalled list of amendments issued yesterday afternoon from the legislative team clerks, and the groupings of amendments, which sets out the amendments in the order in which they will be debated. There will be one debate on each group of amendments. I will call the member who lodged the first amendment in that group to speak and move the amendment and speak to all the other amendments in that group. Members who have not lodged amendments in the group but who do wish to speak should indicate that by catching my attention in the usual way. If he has not already spoken on the group, I will then invite the Minister to contribute to the debate just before I move to the winding up speech. The debate on the group will be concluded by me inviting the member who moved the first amendment in the group to wind up. Following debate on each group, I will check whether the member who moved the first amendment in the group wishes to press it to a vote or to withdraw it. If they wish to press ahead, I will put the question on that amendment. If a member wishes to withdraw their amendment after it has been moved, I will ask whether the committee agrees to them doing so. If any committee member objects, the committee immediately moves to a vote on the amendment. If any member does not want to move their amendment when called, they should simply say not moved. Please note any other MSP present may move such an amendment. If no one moves the amendment, I will immediately call the next amendment on the marshalled list. Only committee members are allowed to vote. That includes substitute members who are attending today. Voting is by show of hands, and it's important that members keep their hands clearly raised until the clerks have recorded the vote. The committee is required to indicate formally that it has considered and agreed each section and schedule of the bill, so I will put a question on each section at the appropriate point. I hope we can complete stage 2 today. That would be our intention. If not, we will stop at a suitable point and we will take up again next week. Right, with that set of instructions gone through, unless anybody's got any questions at this point about process, I would suggest we proceed. And the very first question I need to ask is that sections 1 to 3 of the bill be agreed to. Are we all agreed? Thank you. Great. Okay, we move on to section 4 of the bill, debtor contribution orders, and I call amendment 1 in the name of the Minister. This is grouped with amendments 2 to 7, 9, 10, 11 and 15. And I would ask the Minister to move Amendment 1 and speak to the other amendments in the group.
Well, thank you, Convener, and good morning to members of the committee and clerks. I should declare, just for the record, that I'm a non-practising member of the Law Society of Scotland and a member of the High Scot Credit Union. I'm very pleased that the committee has already supported Section 3 of the bill, the Debtors' Contribution Common Financial Tool. When I came before you to give evidence on the 6th of November, I said that I was looking forward to working with the committee on a collaborative way. We did that in stage 1 proceedings, and I think that we're able to reflect that also in our approach to stage 2. We have amendments that respond to various stakeholders' concerns on discharge, on transfer of functions from the courts, and on the minimum debt level for the minimal assets procedure. We have amendments that respond to concerns that the Scottish Government has picked up on as part of the bill process, like the issue of bank accounts for bankrupts and the adjustment that we're making to allow easier voluntary sequestration by partnerships. And we have amendments that have originated with stakeholders that have been proposed, convener, by organisations such as ICAS and the Law Society of Scotland. And indeed, I've had some engagement with some of these bodies since stage 1, and that, of course, will continue. Convener, I'm pleased that the package of amendments that we've got before us today do useful things to improve this bill. But I'm equally pleased with the way that this package has come together, with different groups, organisations and individuals putting their views forward and having them listened to, and I think the bill is better as a result. By way of an example, Government Amendments 1 to 7, 9 to 10 and 15 address points, including those made by ICAS during stage 1, which raise questions about the process around debtor contribution orders. As the committee is aware, the principle of ensuring that those who can pay do pay is central to this bill. And I do hope, convener, that that is a principle which all members support, and which all members will take the opportunity to, the support of which all members will take the opportunity to reiterate today. The debtor contribution order is the mechanism for setting the appropriate contribution as determined by the common financial tool, which members have just voted for. It's important, therefore, that the process is as simple and straightforward as possible and can be explained to and understood by those who enter bankruptcy. With that in mind, I'd like to highlight the following points on the amendments. Most of the amendments implement a requirement for a debtor contribution order, a DCO, to be made in all cases on initial proposals provided by the trustee. Where an individual has been assessed as unable to make a contribution, that contribution will be set at 0. Having a DCO in all cases will ensure debtors are aware of the responsibilities at the outset, and if a debtor's circumstances change during the 48 months, there is a clear and transparent process for varying either up or down the level of that contribution. Separately, Amendments 5 and 10 provide for a process by which a debtor can challenge the DCO directly. This was available, but this makes the process more direct. It also provides for a review by the accountant in bankruptcy and, if necessary, convener, appeal to the sheriff. Taken together, these government amendments improve and clarify the DCO process. I ask the committee to support the Scottish Government's amendments, and I move Amendment 1.
Thank you. Minister, do any members wish to speak on this group of amendments? No. If not, Minister, if you have nothing to add, I will put the question. The question is Amendment 1 be agreed to. Are we all agreed? Yes. Agreed. Thank you. I now call Amendments 2 to 6, all in the name of the Minister and all previously debated, and I invite the Minister to move Amendments 2 to 6 en bloc.
Moved en bloc.
Thank you. Does any member object to a single question being put on Amendments 2 to 6? No. Thank you. In that case, the question is Amendments 2 to 6 are agreed to. Are we all agreed? Agreed. Thank you. Okay, we now move on to the next, grouping the length of contribution period in respect of debtors' income and estate, and I call Amendment 67 in the name of Margaret McDougall, which is grouped with Amendments 8 and 70. Now, Margaret McDougall is not here. I'm assuming, Jenny Mara, you're going to move Amendment 67, so I invite you to do that and speak to the other amendments in the group.
Thank you, Convener, and good morning. Amendment 67 seeks to reduce the payment period of the debtor contribution order from 48 months to 36 months, or in other words, stop the proposed extension of the practical effects of bankruptcy for Scots from 3 years to 4. I want to begin by addressing a point the Minister made during stage 1 of the debate in relation to the level of support in the Scottish Government's consultation for this move. This was a major debating point in the stage 1, as colleagues may remember. The Minister suggested on numerous occasions that, and I quote, the majority of respondents supported a repayment period of 5 years, and therefore his move to 4 years was a compromise. However, I think to assert this is to take an incomplete look at the Minister's own consultation. The question his assertion refers to is question 10.41a, which asks if there was to be a new payment product, how long should it last for? Now, of those people that answered that question, 32 said they preferred a 5-year repayment period. 27 said 3 years, 1 said 4 years, 5 said another period. Yet, and I believe this number is the greatest of all those I have just read out, 64 are recorded as having not answered this question. And furthermore, in the consultation analysis of question 10.41a, the accountant in bankruptcy, the government's own agency, states quite clearly the majority of respondents who answered this question felt that the product was not required, i.e. the extension. In fact, the number who supported a new payment product at all was only 38 out of 129, with 70 of 129, a clear majority, preferring the status quo. So I think it is safe to say that a majority of respondents did not favour a 5-year repayment period for Scots, but instead supported the status quo. Now, the move from 3 to 4 years in bankruptcy for Scots has been widely criticised by a number of stakeholders, including Citizens Advice Scotland, who believe it is very likely to cause hardship, and the Law Society, of which the Minister is a member, who state there is insufficient evidence that a debtor contribution order for 4 years will improve returns to creditors. And as the Minister said in his opening remarks, that is a key aim for him with this bill, to make sure that returns to creditors are improved. Now, what is more, the extension contravenes the European Commission expert advice that states that repayment periods should range from 1 to 3 years and last no longer than 3 years. On the weight of evidence, then, there is no coherent argument for extending the bankruptcy period in the way the Minister has done in this bill, and I would urge members to support Amendment 67 on that basis. Amendment 70, which removes Section 15 of the bill, is a logical extension of Amendment 67. Section 15 extends the liability of the debtor to 4 years in 2 particular circumstances. Section 15(1) extends the period for which property or rights acquired or received by the debtor after the date of bankruptcy may transfer to the trustee for the benefit of creditors. Under the bill, such property and rights would fall to the trustee for the benefit of creditors for up to 4 years from the date of sequestration. Under Section 15(2), the same time period will apply to non-vested contingent interests, such as legacies, under a will that are acquired or received by the debtor after the date of sequestration. Removing Section 15, then, restores the status quo. Amendment number 8 is a curious amendment, and I wonder if it isn't addressing one of what appears to be many drafting errors in the bill. Perhaps I am wrong, and perhaps it is making a substantive change, but I would look to the Minister to address the content of Amendment 8 in his remarks. Thank you. And should I move?
Yes.
I move Amendment 67
yes.
in Margaret McDougall's name.
Thank you. Okay, and I invite the Minister to speak to Amendment 8 and the other amendments in the group.
Well, thank you, Convener. Plainly, we heard a great deal about the length of the debtor contribution period during Stage 1. Let me start off by responding to Ms Mara's request to explain my own amendment first in the group, Amendment 8. This is a technical amendment which expands Section 4 of the bill to allow a debtor contribution to be shorter than 48 months in some circumstances. And these are where total debts plus interest, statutory interest, can be paid either through contributions or the sale of an asset belonging to the debtor. This therefore ensures that a debtor is not bound necessarily by the 48-month contribution period where it is not required, and means that the trustee can be discharged from office at an earlier stage, minimising unnecessary costs. This means that where the debts, to put it simply, can be repaid in full by virtue of a combination of the contribution orders and assets, then there is no need for the contribution order to extend for 48 months because it's not necessary. It can be paid off earlier, Convener. I think that's a fairly obvious and simple scenario which I hope all members can understand. I think, however, that will be the case in very, very small minority of bankruptcy cases. In general, the 48-month contribution period is a very important principle of this bill. Ensuring that those who can pay their debts do so seems to me to be a very important principle. As I've already said, I hope it is one that all of us accept. I didn't hear Ms Mara say that the Labour Party accept this principle. Perhaps in her closing remarks she could indicate whether or not the Labour Party do or do not accept the principle that in Scotland those who can pay their debts should be asked to make a requirement to do so. Now, I strongly believe that a 48-month minimum contribution period does balance the needs and interests of both those in debt and their creditors. And in the Stage 1 debate, and to a lesser extent again from Ms Mara this morning, we heard that claims that this policy would affect and would damage and would impair and would worry those who are most vulnerable in our society. This simply is not the case. Those whose sole income derives from benefits will not make a contribution. At the current time, 2/3 of those who go into bankruptcy do not make a contribution. Only 1/3 of those who enter bankruptcy make a contribution. 2/3 of people in Scotland benefit from debt relief, often from substantial debts which they've run up without making a contribution. And that, convener, is because, on the basis of the assessment of their income, they are adjudged not to be able to make a contribution and meet their commitments to themselves and their families. I would have thought that that's a system that all of us can support. So the claim that that this change will somehow damage the most vulnerable, which was made by Ms Mara in her opening speech at Stage 1, as well as by many others, is, I think, with all due respect, simply ill-founded. Another point which must be taken into account when considering the payment period is that under the Bill's proposals, the method of calculation used to determine the amount which the debtor will pay will be the Common Financial Statement, our proposed common tool, which members have voted and supported without, in fact, any debate in today's proceedings, convener, so I presume that all members are thereby satisfied with that. Now, the common tool is already used by DAS, in respect of DAS, by the AIB. In other words, those who enter the debt administration scheme are assessed under the common financial tool. And this, therefore, will introduce an element of consistency across DAS, across protected trust deeds, and across bankruptcy. And consistency is something which is sadly lacking at the moment in respect of a contribution orders and the amount that people are required to pay. And I want to just dwell on some of the inconsistencies, anomalies and difficulties which may exist at the moment and which we think this bill will remove, and rightly so, introducing fairness and consistency, perhaps for the first time in Scotland. And the AIB's analysis has shown that this method of calculation uses methodology that leaves individuals and families with the funds necessary to pay for their essential household expenditure. This is absolutely critical, convener. I would not support any system that left families unable to meet and pay for essential items of household expenditure. And any claim to the contrary, I'm afraid, just is not borne out by the facts. Calculations using this methodology are indeed less likely to be breached than using other methodology, and I welcome the committee's support for the CFS to be adopted across Scotland. Without it, the current system is full of inconsistency and potential unfairnesses, and this should not continue. It surely cannot be acceptable, convener, for someone to choose a solution because they've been told that they can pay back less by choosing one solution over others, and that the contribution period is shorter. That is what is happening in the present system, convener. My officials have anecdotal evidence of a company offering to provide a solution for a certain amount each month, and for that sum to be then cut down by another firm seeking the business. Ensuring a standard contribution period and common method of assessment will remove that risk, and combined with compulsory advice, people will be more likely to end up with a fair assessment of the solution that best meets their circumstances. We have also heard claims that a longer contribution period will lead to an increase in breakages, based on what seems largely to be an assumption that the longer something goes on for, the greater the risk that a problem will develop. This, again, convener, is just not supported by the evidence, and let me share some of it with you. Our debt arrangement scheme, which supports people in paying back all of what they owe, currently has an average payment length not of 3 years, not of 4 years, but of 6.5 years. The committee has heard from me before that the rate of revocations in DAS has been quite stable for a number of years at around 3% per quarter, relatively low, despite the fact it's 6.5 years, not 4 years. Furthermore, some additional analysis by the Accountant Bankruptcy of cases revoked has revealed that 75% of current DAS revocations occur during the first 2 years of the existence of the DAS. In other words, most defaults occur early, not late. That, convener, is the evidence. If it was true that the longer a payment period goes on for, the more likely it is to fail, then this wouldn't be the case. In fact, it's quite the opposite. The EIB's analysis shows that the longer a programme under DAS has been running, the less propensity it has to fail. We also did hear, of course, not so long ago, convener, after a long debate and discussion in relation to protected trust deeds, that the Labour members supported a 4-year contribution period. I presume that that still is their position, and they haven't decided to change that view then, although we're not entirely certain about that. But if it is the case that they wish a 4-year contribution period for protected trust deeds and only a 3-year period for bankruptcy, then I'm sure that ICAS may have something to say about that, and perhaps may say that that would induce a kind of unintended incentive for people to enter bankruptcy as opposed to a protected trust deed. So to argue for 4 years contributions for protected trust deeds, as Ms Mara's colleagues, Mr Malik and Mr McDougall, have done, does seem to be totally at odds with the stance that they have now adopted, which, to use the word that Ms Mara employed in stage 1, is that 4 years is iniquitous. If it was iniquitous for bankruptcy, how is it correct and fair for protected trust deeds? Perhaps that may be something which could be answered by Ms Mara later. All of this put together, convener, I think makes a convincing case that the extension in payment will not impact on vulnerable people because they will not be paying, and it is unlikely significantly to impact on those who can pay because the evidence suggests that most breakages occur early on in a repayment arrangement, not in the later period. Contributions will, I believe, be more sustainable because, and this is extremely important, convener, they will be made by using the CFS, and the analysis suggests that sustainable contributions will not automatically lead to an increase in breakages even over a longer period. Therefore, I urge the committee to reject the Amendment 67 proposal to reduce this period from 48 to 6 months. I think out of fairness, I should also say that I have already debated the issue of the consultation responses with Ms Mara. It is plain to me that the support for 4 years is very substantial, not least from the credit unions, who I think almost all of whom support 4 years, and for whom the bad debts incurred will be a very significant impediment to the promotion of credit unions, something I think the Labour Party has been keen on promoting. And in any event, the numbers who responded on a particular choice, 32 supported 5 years and 27 supported 3 years, and 64 expressed no opinion. I don't think one can really draw too much from that other than the fact that 4 years does seem to be a compromise. I haven't mentioned that IVA is the, broadly speaking, an insolvency statutory solution equivalent to protected trust deeds which exists in England, that the period is 5 years, and the claims which were formally made but which were not repeated, I note this morning, Convener, that in Scotland we will be paying longer, or debtors will be paying longer in statutory debt solutions than England. That was a claim made to a newspaper in a letter, and also in stage 1 by Labour members. That claim seems to have been abandoned, and rightly so, because it was never true. Turning now to Amendment 70, it's in keeping with the principles I mentioned a moment ago that Section 15 is important. If a debtor acquires property or other assets during the 48-month term, it is fair that creditors do receive the benefit of this. This provision about acquirenda, property which is acquired after the date of sequestration, does not include the debtor's income after sequestration. It refers to assets which are acquired, Convener, after sequestration, as I'm sure you'll be aware as a fellow solicitor. And this is dealt with by other provisions in the bill on the contribution after fair allowable expenditure. The insolvency sector has welcomed Section 15 and the standardisation it brings to ensure that those in protected trust deeds and in bankruptcy are treated equally. Section 15 should therefore be retained in the bill. A final point to address Mr Malik's desire to remove the application fee for those under MAP. If we were to do this, the impact on the taxpayer would be very significant. The committee has accepted the need for the EIB to recover its costs. This approach has seen a significant reduction on the burden on the taxpayer, Convener, in recent years. In 2007-2008, the net operating costs met to the taxpayer for the accountant of bankruptcy were £6,480,000. In 2012-13, they have been reduced to £650,000. They have been reduced by a factor of 10. I think it behoves us all to acknowledge that that work represents an extraordinary degree of efficiency and success with the accountant bankruptcy. It's perfectly reasonable for the Labour Party or any member of this Parliament to argue that the taxpayer should resume that additional £6 million liability. But that is not something that has happened in any budget debate that I can recall, at least, and were that to be the position of any member, they would have to say where that £6 million or part thereof would be funded, and from which major public services such as the NHS, police, fire or otherwise would take the hit in order to increase the subsidy for the Accountant of Bankruptcy's office. I hope that we can recognise that the Accountant of Bankruptcy has, with her staff, carried out a sterling piece of work in the performance of the duties which rest upon them. I am extremely conscious of their efficiency, and I'm delighted that that indeed will lead to their being able to reduce the costs of bankruptcy for those entering it, the lowest process, the MAP process, from Leela £200 to £100 in MAP. Cutting the fees by half, I think, will be achieved because of the further efficiencies which the accountant in bankruptcy has been able to identify, and the further efficiency that she and her staff will deliver in the performance of their duties. In conclusion, Convener, I invite the committee to support Amendment 8 in my name, and to reject Amendments 67 and 70 in the name of Margaret McDougall.
Thank you, Minister. I have got two members who have indicated they want to speak on this group. Firstly, Mike Mackenzie.
Thank you, Convener. Given the Minister's very comprehensive speech, there's almost nothing that I can add, but I think perhaps I can add a few things that occurred to me because I've sat through, obviously, all of the committee meetings that have dealt with this, and which, in fact, Jenny Mara may not be aware of. First of all, the committee will be aware that we took evidence in private, informally, from a number of people who are good enough to share their experiences of going through this process, difficult as that was for them. And I think the committee are grateful to have the benefit of that evidence. But I was struck by an overwhelming impression of the sense in which most people who went through that difficult process still wished to repay their debts. They weren't content merely with a legal discharge from their debts. They wanted at the end of the process to be able to hold their head up and say, I've repaid my debts. And in fact, I recall distinctly Mr. Malik spoke of a constituent who had a strong feeling that despite getting into debt through no fault of his own, he wanted to honour his debts, he wanted to pay his debts. So I'm convinced that for most people, they want to pay off their debts. And I just wonder if Ms Mara could clarify, perhaps in her summing up, if it really is the Labour position that people should, who are able to make a contribution to their debts, just should make no contribution. The other thing is the convener will recall that I took a particular interest in the common financial tool. The committee advisor described it as an algorithm, and I challenged that at the time on the basis that I felt it was really quite a simple spreadsheet and didn't meet the definition of an algorithm. I had to apologise to the advisor because I later discovered that it was in fact an algorithm. But interestingly, when we looked, we had a special meeting to look particularly at the mechanism in the common financial tool. And I was struck by the fact that, and I would confirm what the Minister was saying, that the lowest 30% of people will make no contribution. The poorest people, the people in most difficulty, will make no contribution whatsoever. But the other virtue, the real merit of this tool, to me, seemed to be the fact that it has an inherent flexibility. And as a Highlands and Islands member, my concern was, does it have flexibility to meet the quite unusual circumstances that people sometimes find themselves in the Highlands and Islands region? For example, would it meet the circumstance that I sometimes face, having to use a ferry to get to and from work? Sometimes having to keep my own boat to when I have to get to work out with ferry hours. And in fact, I was persuaded that the common financial tool does have that flexibility to meet these sometimes unusual circumstances. So I think taking that into account, I don't think the 4-year period will actually inflict any difficulty on people. I would reiterate the Minister's thoughts or suggestion that from the committee's previous work looking at the protected trust deed, from looking at the debt arrangement scheme, I'm convinced there is absolutely no good evidence that defaults will increase by extending to the 4-year period. And all in all, I would urge members to reject Amendment 67 and 70, but to support the Minister's Amendment 8, because I think it's important to retain that bit of flexibility to reduce that period where it's appropriate.
Okay, thank you, Ms Mackenzie. Alison Johnson.
Thank you, Convener. Like Mr Mackenzie, I have heard all the evidence as the bill's progressed to stage 2, but as far as I'm aware, no one has ever suggested that people who can afford to pay their debts shouldn't do so. I think it's fair to say that there's a broad spectrum of organisations who are against the move to increase the debtor contribution period in the bill. We've heard that the money advice NGOs, the Law Society, creditors are all against the increase. And when you have both creditor and debtor organisations opposing it, there clearly is an issue. Ewan McPherson from Lloyds Bank said, "Bankruptcy is about wiping the slate clean, and 36 months is an adequate payment period." And Citizens Advice Scotland, who have massive experience in this area, made it clear that they think the current balance of 3 years is the right one for creditors and debtors. The Minister has made the point previously that, the committee previously supported the debt arrangement scheme regulations at 48 months. But those regulations were brought before we had a chance to take a full set of evidence where this issue has emerged. But we've got an opportunity here to get the detail right in the primary legislation, and we should do so. Thank you.
Thank you. John McCaulton.
Thank you very much, Convener. Yes, as a substitute, I did attend some of the evidence sessions for this bill in committee, and I was particularly struck by the view of the credit unions who gave evidence at the session I attended, and credit unions were very supportive of the 4 years, and I was very struck by the way the credit unions described some of the situations they found themselves in which people didn't pay back their debts when they were able to pay back their debts. And I think we shouldn't lose sight of the fact that in this area, many of the victims are in fact creditors, and I have experience of constituents who are creditors, small business people, people who are really struggling as a result of those who can afford to pay their debts not paying their debts. So I think if Labour say that they're supportive of the credit union movement, they should also think very carefully about what the credit unions have told this committee and their support for the 4 years.
Thank you. Okay, if no other members wish to speak.
Yeah,
briefly, Mr. Brunning.
John McAlpin clearly made the point that I was about to make. But in all of this, while we are concerned to do the right thing by debtors, we should remember that there are two sides to this situation, and hopefully throughout the rest of our discussions today that we also look through the frame of reference of creditors, which has just been expounded by John.
Okay. Thank you. Okay, I will now go to Jenny Mara and ask whether you wish to, firstly, to wind up and indicate whether you wish to press or withdraw Amendment 67.
Thank you, Convener. I'm going to press Amendment 67. And can I start my closing remarks by rising to the bait, Convener, because I think the Minister has invited me, as has Mike Mackenzie, to clarify the Labour Party's position on those who should and can pay. They should pay, yes. We think absolutely that people who are in debt should pay their debts and pay as much of that debt as is practically possible. However, the evidence before us and the experts have said that this movement from 3 to 4 years will not work, both for creditors, to address Chick Brodie's point, and will be iniquitous, the word I used at stage 1, on a lot of people who go into bankruptcy. Now, I am slightly disappointed by the Minister's remarks, because I did actually expect a bit of movement on this particular issue, and didn't expect the need to lay this amendment at stage 2. I expected him to move on this between stage 1 and stage 2. I'm also disappointed about the quibble on the consultation numbers, because after the stage 1 debate, there was a significant amount of commentary from experts in bankruptcy online who actually agreed with my analysis of the government's own consultation figures, and I can certainly send those remarks to the Minister if he's interested. But they agreed with our analysis of the government's consultation that actually there was a clear majority of people who preferred the status quo, and I am disappointed that the Minister continues to, I think, massage these figures, and I don't think is being completely genuine with them. I think there's a clear majority that do prefer the status quo on this. I understand what the Minister is saying about cost recovery, and that is an argument that's been deployed when the government decided to double the fee for the low-income, low-asset route, but I think that's something we're coming to later this morning. But bankruptcy, I believe, and the Labour Party believes, has a role in getting people back into the economy. And I think government has a role to get people back into the economy as well. And all the expert evidence and the evidence this committee heard shows that to get people back into the economy and to get the maximum impact and benefit for creditors as well is 3 years rather than 4 years. To address Joan McAlpine's point, it was the Law Society that said there is insufficient evidence that a debtor contribution order for 4 years will improve returns to creditors. So I completely understand the points that Joan McAlpine and Chick Brodie are making, that creditors are often victims in this as well, and I would completely agree with that. However, the evidence doesn't bear out that the extension to 4 years will actually improve the situation for creditors. The Minister knows that the Citizens Advice Scotland is one of the most respected debt advice agencies in the whole country, highly respected by government, highly relied on by our citizens, and they oppose this move to 4 years. The Law Society opposes it. It is against the European Commission's advice, and I would press my amendment, Convener, Amendment 67, and ask other members to consider it also. Thank you.
Thank you. Okay, in that case, the question is Amendment 67 be agreed to. Are we all agreed? Yes. No. No. Okay, there will be division. Those in favour of Amendment 67, please show. 1, 2, 3. Those against, please show. 1, 2, 3, 4, 5. And abstentions? Okay, got that. Okay, so Amendment 67 is defeated. Okay, I now call Amendments 7 to 11, all in the name of the Minister and all previously debated. And I invite the Minister to move Amendments 7 to 11 en bloc.
Moved en bloc.
Thank you. Does any member object to a single question being put on Amendments 7 to 11? If not, the question is Amendments 7 to 11 are agreed to. Are we all agreed? Yes. Okay. We are agreed. Move on to the next grouping on the subject of deductions from earnings and other income. I'll now call Amendment 12 in the name of the Minister, group with Amendments 12A, 14 and 61. And I invite the Minister to move Amendment 12 and speak to all amendments in the group.
Thank you, Convener. I hope this is a group in which we can come to an agreement reasonably easily. Members will recall evidence during Stage 1 which highlighted that under the bill it was possible to deduct employment income at source, but there was no equivalent provision when the debtor was able to pay contributions from other income. Members will also recall recommendation 35 of the committee's report, which said the committee invites the Scottish Government to indicate whether it intends the new provisions to enable sources of income beyond employment, for example in relation to pension income, rental income or self-employed income, to be deducted from a debtor's income. I am pleased to say that this is precisely what the Amendments 12 and 14 do, to make provision to secure contributions, where appropriate, from those who are self-employed or who have other sources of income. Amendment 61 also picks up a recommendation of the Delegated Powers and Law Reform Committee to make associated delegated powers subject to the affirmative procedure. And Jerry Mara's Amendment 12A, I noticed, doesn't disagree with the principle of deductions from unearned income. Rather, it seeks to extend from 2 to 4 the number of payments that can be missed before the trustee can use their order to deduct contributions from source. I'd be interested to hear Jenny Mara's justification for this increase. The Scottish Government's position that this is probably an extension too far. It gives rise to unintended consequences. For example, it would enable a debtor to miss 3 payments, make a payment, miss 3 payments, without the trustee being able to take action. Our guiding principle is that we want to support those who can pay to pay. What we want to do is to encourage the debtor to quickly get in touch with their trustee and discuss any reasons why they might be struggling to manage their payments. We think the original 2-payment interval, which will usually be monthly, achieves this. It incentivises the debtor to get in touch with their trustee. Jenny Mara's amendment means there's less incentive, which I think, with respect, Convener, is the wrong approach to take. Therefore, I urge members to support Amendments 12, 14 and 61 and to reject Amendment 12A, and I move Amendment 12.
Thank you. I now invite Jenny Mara to move and speak to Amendment 12A and speak to the other amendments in the group.
Thanks, Convener. Amendment 12A seeks to amend Amendment 12 by allowing for 4 payment intervals to lapse before deductions from earnings can take place. There can be huge implications for a person in bankruptcy whose wages get automatically deducted. For some, it can even mean losing their job, as Citizens Advice Scotland has pointed out in their Stage 2 briefing note. And for that reason, we believe that this method of retrieving contributions ought to be a last resort. Extending the payment interval from 2 to 4 will help account for emergency payments that need to be made or a change in circumstances, such as a separation from a partner. In these circumstances, a debtor may not necessarily need a payment break, but could benefit with a little more leeway to adjust to new circumstances or recuperate the money used to make an emergency payment. I would move Amendment 12A.
Thank you. Do any members wish to speak on this group? If not, Minister, do you wish the opportunity to wind up?
Well, I'm sorry, Convener, I should have drawn attention of members to Section 432F, payment break, where the debtor has the right to apply to seek a payment break not exceeding 6 months in the event that there is any change in the debtor's circumstances, such as losing a job or illness, and that mirrors provisions in PTDs and DAS. So I think that perhaps is relevant to some of the points that Ms Mara has just made in providing the debtor with a fair and sensible remedy were there to be some difficulty, tragedy or material change in circumstances in the debtor's life.
Thank you. Jenny Mara, can you wind up on Amendment 12A and indicate if you are going to press or withdraw?
Thank you, Convener. I understand the Minister's point there. I just wonder if 2 payment periods might actually be sufficient for such an application to be made. But I would be willing to withdraw my amendment if he could confirm that payment break and 2 payment periods is sufficient time for that application to be made, approved and an arrangement entered into.
Well, I think the 2 issues are distinct and separate. I'm happy to write to Ms Mara after the committee meeting, but I think they are distinct and separate, although they are related, because if there's material change in circumstances which causes the debtor to be unable to pay, then there's provision to seek a payment break. But of course, if there's no change in circumstances and the debtor simply doesn't pay after having been assessed at a particular contribution, then I think it's correct that some kind of action can be taken after a period of which would normally be 2 months. I think that's a reasonable period, given having regard to the fact that the total length of the arrangement is 4 years, Convener.
Mara?
I'd like to press my amendment in the meantime, and perhaps once I receive the letter from the Minister, then we'll reassess for stage 3. Thank you.
Thank you. The question is therefore that Amendment 12A be agreed to. Are we all agreed?
No.
Okay, there will be division. Those in favour of Amendment 12A, please show. 1, 2, 3. Those against 12A, please show. 2, 3, 4, 5, 6. Okay. That is defeated. Minister, do you wish to press or withdraw Amendment 12?
Press.
Thank you. The question is that Amendment 12 be agreed to. Are we all agreed?
Yes.
No. There will be division. Those in favour of Amendment 12, please show. 1, 2, 3, 4, 5, 6, 7. Mr. Brodie. And those against? None against. Abstentions? 2 abstentions. Okay, that is agreed. Okay, move on to the next grouping on discharge of debtor. And I call Amendment 72 in the name of Jenny Mara, grouped with the other amendments as shown in the groupings. Now, I need to point out a number of preemptions. If Amendment 72 is agreed to, I cannot then call Amendment 13. If Amendments 30 and 75 are direct alternatives, and therefore if Amendment 39 is agreed to, I cannot call Amendment 78, which is preempted. I would ask Jenny Mara to move Amendment 72 and speak to all amendments in the group.
Sorry, Convener, can I just clarify, is this Group 4?
Yes.
Yes, thank you. I'd like to keep this as brief as possible. You'll be relieved to know as the majority of amendments in this group are technical and consequential. I want to touch firstly upon my substantive amendment 71, which all other amendments in my name are there to support. Amendment 71 seeks simply to remove section 16 from the bill and restore automatic discharge to the bankruptcy process, as is the practice now. Again, I want to refer back to expert advice from the European Commission on bankruptcies. It states that...
Sorry, just
is there a problem? Sorry.
Just checking, we are talking about Amendment 72. I think you said 71. It's 72. Is that right?
I think you're probably right, Convener. Sorry, that's an error in my notes.
That's all right.
Okay, thank you.
Carry on.
I'm referring to Amendment 72. It seeks to remove section 16 from the bill and restore automatic discharge to the bankruptcy process, as is the practice now. And I want to refer back to the advice from the European Commission on bankruptcies. It states that discharge should be as automatic and as reasonably limited in time as possible, and for good reason. ICAS warn that the current proposals around discharge could have serious unintended consequences. In their briefing, they say, the proposals shall not only result in additional time and cost administering the discharge process by the trustee and the resultant lower return to creditors, but it is highly possible that debtors shall not receive their discharge until the end of their contribution period, in order that the trustee can make the relevant declaration that the contribution ordered has been complied with and that the debtor has cooperated with the trustee. It is our belief that bankruptcy ought to get people back on their feet as soon as possible. In our fragile economic recovery, where businesses are only beginning to see growth return to our economy, we must be clear that we are not creating laws that will penalise failure more than is necessary. For that reason, I would urge members to support Amendment 72 and the technical amendments that underpin it. During Stage 1, the Minister made a number of concessions, among them to alter the proposed process of discharge in response to concerns raised by the committee. Amendments 21, 26 and 29 and the raft of technical amendments in the Minister's name are designed to do just that. In cases where the accountant in bankruptcy is not the trustee, these amendments remove the need for an application for debtor discharge and instead require a report to be filed by the trustee to the accountant in bankruptcy, detailing if and how the debtor has met the prescribed discharge criteria. While this is certainly not reinstating automatic discharge as we would like to see, it is a step in the right direction, and for that reason we will also be supporting the Minister's amendments.
Thank you. I ask the Minister now to speak to Amendment 13 and the other amendments in the group.
Thank you, Convener. Our proposal to put aside automatic discharge for full administration bankruptcy as opposed to the minimal asset or MAP process has been contentious for some people. The Scottish Government's policy has always been clear. The debtor should automatically receive their discharge unless there is evidence that the debtor fails to cooperate with their trustee, as well as to comply with their statement of undertaking. Cooperation, Convener, has a specific meaning in Section 64 of the Bankruptcy Scotland Act 1985, and that is unchanged by this bill. Our proposal to link a debtor's discharge to the debtor's cooperation was overwhelmingly supported by respondents to our consultation. 103 out of 129 of the stakeholders who responded to this supported it. Where we perhaps have needed to do more thinking has been around the processes in the bill to express our policy that discharge should proceed automatically unless there is a failure to cooperate. So this is what we have done, and there are three things that I'd like to bring to the committee's attention and indeed to read into the record, Convener, for those who have an interest in this matter out of this room. Amendments 21 and Amendments 13 to 22 to 24 and 39 and 55 refer. The first is the proposed new section 54(4), which says the trustee must prepare and send a report. Must is the key word here. It is automatic. The second is subsection 4A, which says without delay after the date, which is 10 months after the award of sequestration. So this happens automatically at the 10-month point in every case. The trustee must prepare and send a report. The third is the trustee must prepare a report. Previously, the trustee decided whether to make an application. It would now be quite simple. The trustee reports to the accountant of bankruptcy automatically in every case at the 10-month point. On receipt of the report, the accountant of bankruptcy decides whether to award the debtor's discharge. And as I've said before, Convener, we expect this to happen without delay in the significant majority of cases. Amendments 25 to 31 replicate a similar provision for the procedure where the debtor is subsequently traced. I think this is a good example of the Scottish Government taking stakeholders' concerns on board. When the Law Society said that they consider the removal of automatic discharge to be a retrograde step, it was obvious that we needed to address that, and we've come back with a process that, as I've explained, will mean that the significant majority of debtors should receive the discharge to all intents and purposes automatically. We're aware of the problems that arose before the 85 Act, where debtors could remain bankrupt almost indefinitely, and which the 85 Act ended by bringing in an automatic discharge after 3 years, subsequently reduced to 1 year. Jenny Mara's amendment would strike out these changes to the discharge process. Some people have spoken, as I've said, about the process turning the clock back to 85. I don't think we should do that. I'm pleased that Jenny Mara has indicated that she is now going to support the government amendments. The emphasis on supporting people who can pay to pay means that bankruptcy can't be something that is done to people. It has to be something that the debtor plays a part in. Our amendments deliver this, And overall, I think the amendments respond to stakeholders' concerns, improve the process, and therefore I move Amendment 13.
Thank you, Minister. Any members wish to speak in this grouping? Alison Johnson.
Thank you. The Minister has listened to stakeholders and committee on this issue and brought a more streamlined process of discharge compared with what was previously proposed. The Minister's amendment describes a situation where trustees must report to the AIB within 10 months. I do support this change, but I'm still concerned that we're adding in administration and complication to a process that already works well. ICAS and Citizens Advice Scotland believed automatic discharge should be retained to minimise the bureaucracy involved. As the Minister noted, the Law Society told us that the introduction of automatic discharge by the 1985 Act was seen as a huge step forward that would stop people ending up in bankruptcy in perpetuity. Measures do already exist to deal with uncooperative debtors through bankruptcy restriction orders, and the deferral of discharge past the normal sequestration period if that will benefit the creditor. These appear to be sensible existing measures to address uncooperative debtors, and I am minded to support retaining the current system of automatic discharge.
Okay, thank you. Any other members wish to comment? I would just observe, Minister, having met ICAS myself on this issue, I think they very much welcome the amendments you've put forward, but do remain concerned about the loss of the automatic discharge that previously existed, and are concerned about the additional costs that might arise from this, particularly where a debtor is not automatically discharged and therefore challenges that to the AIB and potentially to the courts thereafter, which just adds costs and, to the whole process, and of course minimises the return to the creditor. So I think that is a factor that needs to be borne in mind. I think, Minister, I'll ask you to respond and wind up, if you would.
Well, just to respond to your own remarks, Convener, and Alison Johnson's remarks, I mean, the intention is that discharge will essentially remain automatic in the vast majority of cases, but there is an onus on the debtor to cooperate. I respect ICAS's views. I think in practice the report which will be required will be a fairly simple document. It's the case that in sequestration processes, in those cases where the accountant of bankruptcy is not the trustee, trustees are insolvency petitioners. They're well used to filling in, completing forms and reports. They have to do a number of these forms and reports in the course of the bankruptcy process. This, I don't think, will significantly add to the burden, and the process will remain automatic. But it will put an increasing onus that the debtor should cooperate in the process, and that was something which, as I say, was welcomed by the vast majority of people who responded to our consultation. So we will continue to work with ICAS to ensure that the procedures are delivered and implemented in the way which is the most efficient, the least burdensome, and involves the minimum additional expense, if any.
Thank you. Okay, I now invite Jenny Mara to wind up and indicate whether she will press or withdraw Amendment 72.
No further comments, Convener, but I'm going to press the amendments.
Okay, thank you. Questions therefore that Amendment 72 be agreed to. Are we all agreed?
No.
Okay, those in favour of Amendment 72, please show. 1, 2, 3. Those against Amendment 72, please show. 1, 2, 3, 4, 5, 6. Okay, that is defeated. I will therefore now call Amendment 13 in the name of the Minister already debated with Amendment 72. Minister to move formally.
Moved formally.
Thank you. The question is Amendment 13 be agreed to. Are we all agreed?
Yes.
Thank you. That's agreed. I now call Amendment 14 in the name of the Minister already debated with Amendment 12. Minister to move formally.
Moved formally.
Thank you. The question is Amendment 14 be agreed to. Are we all agreed?
Yes.
Thank you. That's agreed. Now call Amendment 15 in the name of the Minister already debated with Amendment 1. Minister to move formally. Thank you. The question is Amendment 15 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is that Section 4 be agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. We now move on to the next grouping, sequestration and trust deeds where debtor has few assets. And I call Amendment 68 in the name of Jenny Mara. This is grouped with Amendments 16, 17, 69, 18 and 58. I would point out if Amendment 68 is agreed to, I cannot then call Amendment 16, which is preempted. I would invite Jenny Mara to move Amendment 68 and speak to all amendments in the group.
Thank you, Convener. Amendment 68 will remove both the minimum and maximum debt cap for those with little assets seeking to access bankruptcy. It is our belief that a minimal asset route should be available to those with the least amount of assets and income, regardless of the level of debt that they have. Telling someone with no assets and little income that they have too much debt to enter the minimal asset route seems incredibly counterintuitive. The current LILA route has no debt ceiling, and I see no reason to introduce one now. The bill as it stands will put many more restrictions on the new minimal asset route than are currently in place. And I think someone must demonstrate insolvency, have received money advice, signed a statement of undertaking, and credit restrictions will be put in place. Given the criteria is already tightening, I don't believe restricting it further by prescribing an arbitrary debt ceiling or floor is necessary. Now, the Minister recognised this implicitly when he listened to the concerns of Citizens Advice Scotland and others and committed to raise the debt ceiling in MAP to £17,000 instead of £10,000. And while we support his amendment as an improvement on the Government's original proposal, again, we must ask why £17,000 and not 20 or 25. Amendment 17 appears to be a clarifying amendment, and Amendments 18 and 58 consequential amendments. Amendment 69, in the name of Hanzala Malik, again reinforces our point about access to the minimal asset route by removing any fee to enter it. Citizens Advice Scotland has provided consistent and clear advice over the years, showing that any fee barrier to accessing bankruptcy for those who have the least is a barrier to accessing the help that they need. So again, I would urge members to support Mr Malik's amendment.
Thank you. I now ask the Minister to speak to Amendment 16 and other amendments in the group.
Thank you, Convener. On the increase to the maximum debt level in the minimal asset process, or MAP, I'd thought that this discussion wouldn't be primarily about whether the level should be raised, because I did announce during the Stage 1 debate that we would raise the level from £10,000 to £17,000. And the reason I did that was that we listened very carefully to what stakeholders said, and most especially what Step Change had said. And we responded thereto, and we responded also, I think, to the committee's request that we look at this matter again. The committee recommended that we do so, we did so, and we responded in Stage 1. So I thought we wouldn't be primarily debating this today, but since Ms Mara has raised the rationale of why 17, this is a matter of judgment. But of course, it was really after meeting with stakeholders, which I did following the consideration in the Stage 1 process. 17,000, incidentally, is well above the average debt figure of £14,506 quoted by Step Change. So I hope that we've evinced a kind of a response which is characterised by a willingness to listen carefully to these somewhat technical matters, but nonetheless important matters, as Ms Mara has quite reasonably argued. Now, the effect of this will extend the criteria to cover 70% of existing low-income, low-assets or LILA cases, and I hope that this is the right approach. Amendment 68, Convener, is a discussion about whether there should be a maximum limit at all. It's a different argument, so I'd like just to set out our response quite clearly as to why there should be and why it's right that there should be such a limit. The MAP has to have clear, effective, fixed criteria. The criteria for the existing LILA scheme are too loose. This is shown by the large number of transfers out of LILA, people who enter LILA, but which it subsequently emerges shouldn't actually have been in LILA in the first place. As stated in the financial memorandum accompanying in the bill, in 2012-13 there were 774 transfers out of a total of 3,481. This represents nearly a quarter of all LILA cases, and it can't be right that a quarter of cases can have to be redirected or transferred, and this does involve unnecessary costs. The important thing is that MAP cannot be administratively complex to operate. The IB's records show that there have been previous LILA cases where the debt levels were 412,000, 309,000 and 236,000. Plainly, these were not debts in a low-income, low-asset product was designed to cope with, and yet these debtors have been able to take advantage of the scheme because of the loose criteria. If we remove the debt ceiling, it is unlikely that we would be able to deliver MAP for a £100 application fee. cases would become administratively more complex, giving rise to additional cost. There is plenty of evidence to show demand for effective low-cost debt relief is growing as a proportion of the overall demand for bankruptcy. Figures announced today show that 49.4% of all debtor applications in the last quarter were applications for LILA, an increase of nearly 8% on the same figure last year. So there are more low-income, low-assets cases than there were before. It's rising, and it's right that we deal with them as effectively as we can. Now, these vulnerable low-income, low-assets debtors need a clear, well-signposted, easily understood and efficiently managed solution to their problems. And all of that, I think, is better for the debtor. Mixing up the MAP and full administration bankruptcy in cases where there may be complex assets involved, business assets, heritable property, claims about gratuitous alienations or other matters of that sort, conveners, you'll appreciate, these do not belong in the MAP LILA world. So there has to be a method of differentiating between the two, and one which deals with those most vulnerable in the most efficient and simple way to make the process as pain-free, as quick, as swift, as efficient, and as easy to administer as it possibly can be. Our other amendments, 17, 18 and 58, are technical adjustments in the Bill and the 85 Act, accurately to reflect references to property excluded from vesting in the trustee, about the MAP limit and the definition of trustees generally. Turning to Mr Mallock's Amendment 69 to prevent the IB charging any fee to the debtor, as I mentioned in passing, 3,481 debtors entered bankruptcy via the LILA route in the last financial year, and each paid a fee of £200. This resulted in £696,200 paid to the accountant of bankruptcy. The accountant of bankruptcy, as I've mentioned previously, anticipates the cost of administering a MAP case will be in the region of £100, and that the fee for MAP will be set around this figure. If this fee, convener, were reduced to zero, as Mr Mallock has called for, on 2012-13 figures, the project cost would result in a cost increase to the public purse of £348,100. With the IB moving towards self-funding, it would be unsustainable to allow access to debt relief without the payment of a fee. I therefore urge members to support amendments to Amendments 16 to 18 and 58, and to reject Amendments 68 and 69.
Thank you, Minister. I think, Jenny Mara, you omitted to move your Amendment 68. Can you just do so formally?
Moved.
Thank you. I now call Hanzala Mallock to speak to Amendment 69 and the other amendments in the group.
Thank you very much, Convener. The MAP route into bankruptcy is meant to help poor people with few assets to get to manage their debt. Although the intention to set the fee of the MAP route at 100, which is half the current cost, is a step in the right direction. However, it's my personal opinion that any fee is a barrier for the most poorest in our communities. This isn't about, it has been suggested that there's been some savings made historically, and I can't see why we cannot make more savings. In our evidence sessions, the people who are the victims who've fallen through the system and have suffered bankruptcy, they felt that the fee is indeed a barrier. The Citizens Advice Scotland has stated that they agree with me and they strongly support my amendment. And they themselves, as you'll appreciate, deal with a lot more people with bankruptcies than we ever will or do. I just want to re-emphasize the hardship the families actually go through during this period of time. And I think for us, a small fee for many of us, it's a huge relief to those families, and therefore I propose the amendment.
Okay. Mr Mallock. Do other members who wish to speak on this grouping? Mr Mackenzie.
I think, Convener, it's just worth pointing out for the benefit of the non-lawyers on the committee, and as a non-lawyer myself, it's perhaps useful for me to try and explain it in layman's terms, but the Minister made reference to gratuitous alienation, and that basically describes a situation where a debtor tries to sell an asset perhaps to a friend or acquaintance for much less than it's worth, and perhaps there's a cash or other consideration that remains a mystery, but I hope that's useful to other committee members.
Very grateful to you for that instructive lesson in bankruptcy law. Mr Mackenzie, I'm very impressed that you've learned so much during the process of this legislation. Does any other member wish to contribute on this grouping? If not, I'd invite Jenny Mara to wind up and indicate whether she'll press or withdraw Amendment 68.
I intend to press the amendments, Convener. I just have one simple question for the Minister in my closing remarks. I'm very confused as to why the Minister is proposing to halve the Lila fee at this stage, because it was only a year ago that I questioned John Swinney at the Justice Committee when he doubled it from £100 to £200. So I don't know if the costs of administering the Lila route seem to have halved in the last year, or was the fee doubled last year so the Minister could bring it down in this bill? I really don't know, but I'm confused by what's going on here. So if you'd like to explain the reasons behind this.
Happy to respond. Indeed, I was keen to respond to the points that have been made by Mr Malik and to Ms Mara out of fairness, because these are very important points. I mean, I'm absolutely determined that the most vulnerable should not be denied access to statutory solutions. And I have to say that we engage very closely with the CAB, and indeed we've engaged with them relatively recently to discuss this bill, and we continue to do so. And of course they are, as Mr Malik says, dealing with a large number of cases. That being so, it's surprising that there hasn't actually been any evidence presented to us that there is a denial of access, an impairment or a blockage of access to bankruptcy as a result of the imposition of the fee. Had that been the case, we would have expected there to have been evidence submitted. But with great respect, Convener, to all of those involved in doing the excellent work to help people in severe debt in Scotland by the CAB and others, no such evidence has been forthcoming, and that has to be made absolutely clear. Secondly, to answer Ms Mara's point, she says, why are we halving the fee for Leela from £200 to £100? Well, we're not doing that. So the question, I'm afraid, is inapt. The fee for Leela is £200. The proposed fee for MAP will be no more than £100. There are two different processes. It's precisely because they are different processes, and precisely because of the good work that the Accountant of Bankruptcy has been doing in analysing how it will be able to process these matters under the MAP process as opposed to the Leela process with a greater level of simplicity and efficiency, that she has been able to inform this committee that she expects that the maximum that the fee would be for the new process, not Leela but MAP, will be £100. Now, Ms Mara is correct to say that largely the cohort of people who will be entering MAP will, broadly speaking, be the same as Leela. But we've just heard, I mean, I just went over some cases and examples of cases that patently shouldn't have been Leela, but because of the loose definition had to go out of Leela at some, I guess, stress and anxiety for the people involved, as well as additional administrative costs. And I've also pointed out that nearly a quarter of all of the Leela cases turned out to have to be transferred. So I think, one doesn't really need to have a thorough understanding of the administration systems themselves to be able to infer that this is a system which, although has been operating well, can be further improved in the way it operates. And it's precisely because that painstaking and detailed work has been carried out by the AIB that she has been able to conclude that a high level of efficiency will be able to be followed when MAP is introduced, when the bill's provisions commence, and after a great deal, I may say, Convener, of further work and consultation with stakeholders, especially about the operation of the Common Financial Tool, to effectively halve the cost of access for the most vulnerable to the new bankruptcy procedure intended for the most vulnerable. So I do hope that that's a reasonable explanation, and I do hope, therefore, that the committee will be persuaded that the reasons I've given are entirely clear, understandable, and indeed logical, and that the amendments that I've brought forward will be supported.
Okay, thank you. The question is Amendment 68 be agreed to. Are we all agreed?
No.
Okay, there will be a division. Those in favour of Amendment 68, please show. 1, 2, 3. Those against Amendment 68, please show. 1, 2, 3, 4, 5, 6. Okay, that is defeated. I therefore call Amendment 16 in the name of the Minister, already debated with Amendment 68. Minister to move formally.
Move formally.
Thank you. The question is Amendment 16 be agreed to. Are we all agreed?
Yes.
Thank you. It's agreed. I call Amendment 17 in the name of the Minister, already debated with Amendment 68. Minister to move formally.
Move formally.
The question is Amendment 17 be agreed to. Are we all agreed?
Yes.
Yes, thank you. That's agreed. Now I'll call Amendment 69 in the name of Hanzala Malik, already debated with Amendment 69. Sorry, that's not right. 68, that should be. Hanzala Malik to move or not move?
Move.
Move. Thank you. The question is Amendment 69 be agreed to. Are we all agreed?
No.
No, there will be a division. Those in favour of Amendment 69, please show. 1, 2, 3. Those against, please show. 1, 2, 3, 4, 5, 6. That is defeated. The question is that the question is that Section 5 be agreed to. Are we all agreed? Yes. Agreed. Thank you. I now call Amendment 18 in the name of the Minister, already debated with Amendment 68. Minister to move formally.
Move formally.
Thank you. The question is that Amendment 18 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is that Schedule 1 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is that Section 6 and 7 be agreed to. Are we all agreed?
Yes.
Thank you. Okay, we now move on to the next grouping on moratorium on diligence, and I call Amendment 19 in the name of the Minister in a group on its own, and I would ask the Minister to move and speak to the amendment.
Amendment 19 amends Section 8 of the Bill to provide that the moratorium on diligence won't apply to specific diligence procedures if these have reached an advanced stage. These procedures are to auction articles already attached and notified for auction or already removed, or to implement a decree of forthcoming, or an order to sell a ship or a share of a ship or its cargo. These procedures are allowed under the equivalent procedure in relation to the debt arrangement scheme. I am advised that these procedures are not widely used, Convener, and therefore that this provision, whilst it's valuable to ensure consistency and practicality, are unlikely to be cited often. I ask members to support this amendment, which I move.
Thank you, Minister. I think Mr Mackenzie wants to comment on this vexed issue of sale of ships.
Well, perhaps that's something that might be considered under the LELA process, but which would not be considered under the MAP process.
Thank you. Any other members wish to contribute? Do you wish to add anything, Minister? No. Okay, in that case, the question is Amendment 19 be agreed to. Are we all agreed?
Yes.
We are agreed. Thank you. The question is Section 8 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is that Sections 9 to 12 be agreed to. Are we all agreed?
Yes.
We are agreed. We move on to the next grouping on debtors' bank accounts, and I call Amendment 20 in the name of the Minister. This is grouped with Amendments 20A, 73, 21A, 74 and 66. And I would ask the Minister to move Amendment 20 and speak to all amendments in the group.
Thank you, Convener. I'm pleased to speak to Amendments 20 and 66, and I'll set out the Government's position on the other amendments in this group. Members will recall that during Stage 1 we heard concerns raised by stakeholders about the predicament that bankrupt individuals could find themselves in as their bank would close down their account when they went bankrupt, and that subsequently they have been unable to find another bank willing to let them open another account. We heard that the UK Government had proposed a remedy in their deregulation bill, and we were asked why couldn't the Scottish Government do something similar. I'm pleased to say that the Scottish Government is responding to that, and the Scottish Government amendments in this group would make a similar proposal. While following formal notice under the new procedure, a trustee's powers to challenge bank transactions will be similar, there would be increased protection for the banks up to that point. Margaret McDougall has lodged 4 amendments in this group. Amendment 20A amends our amendment for the trustee to provide formal notice to the bank by adding an additional requirement to confirm the implications of the discharge for the bank and the debtor. Amendments 21A and 74 propose a new notice requirement for the trustee. On the discharge of the debtor, the trustee would have to notify a bank which was notified at the start of the procedure. On these amendments, we do not consider that an addition to the contents of the notice or that the addition of an extra notice requirement at discharge are either necessary or helpful additions to the process. Banks, Convener, are already well aware of the bankruptcy process and the implications of a debtor's discharge from bankruptcy. They deal with bankrupts on a daily basis, so these amendments would add a mandatory layer of administration with no apparent benefit to the debtor or other parties. These can be handled by those involved without legislating on the point. Amendment 73 provides that nothing in the 1985 Act prevents a debtor from holding or applying to open a bank account. Our position on Amendment 73, unfortunately, is that it would have no effect and confuse the precise requirements of the 1985 Act. Even if it did have an effect, and we don't believe that it could, such an effect would relate to banking, which is reserved. Accordingly, whilst I would urge members to support Scottish Government Amendments 20 and 66, I would urge them to reject Amendments 20A, 73, 21A and 74, and I move Amendment 20.
Thank you, Minister. I would now invite Jenny Mara to move and speak to Amendment 20A and the other amendments in the group.
Convener. Amendment 20A inserts a provision that when the trustee notifies the bank of an individual's sequestration, that it should also confirm the implications of sequestration on the bank and the debtor. Now, this amendment was laid by Margaret McDougall to provide extra clarity for all parties involved in the sequestration process as to the implications of bankruptcy, and the amendment is supported by Citizens Advice Scotland, who raised this as a major issue during stage 1 of this bill. Amendments 21A and 74 provide for notification by the trustee or the accountant in bankruptcy to the bank when the debtor is discharged from bankruptcy. Because two separate procedures apply, two amendments are necessary. Now, this is a practical tool to help both the bank and the individual make financial decisions after sequestration. Amendment 73 seeks to point out that nothing in the Bankruptcy Scotland Act 1985 prevented a person whose estate has been sequestrated or whose estate has been discharged from sequestration from holding or applying to open a bank account. The aim of this amendment is to carry that provision over into this bill and to maintain the status quo. And I move the amendments.
Thank you. Members wish to speak. Mr. Brodie.
Yes, if I may. Thank you, Convener. In my previous life, dealing with companies about to enter liquidation or or the owners facing bankruptcy, I have never, ever come across a situation where the banks involved did not fully understand the implications both for themselves, and they may have been the progenitor of the situation, or indeed for the debtors. I just do not understand what Amendment 20A adds to this debate.
Okay, thank you. Mr. Brodie. Alison Johnson.
Thank you, Convener. I'm pleased to see amendments on bank accounts from the Government. There is little point in a financial health service if people can't hold a bank account, which helps them to do normal everyday things like pay their energy bills. I understand the amendments largely mirror what is happening in England and Wales, which reduces the risks to banks, and I'm happy to support that. I also thank Jenny Mara for explaining the amendments. The requirements to tell the banks who have previously been notified that the bankrupt person is discharged are sensible. If there was any danger of banks continuing to monitor accounts unnecessarily, this should reduce it. And I'm also content with Amendment 73, which makes it crystal clear that nothing in law is preventing banks giving these people bank accounts. Thank you.
Thank you. If no other members wish to speak, I would just add my appreciation to the Government for bringing forward these amendments. This is an issue identified in the Stage 1 evidence taken by the committee, and it's encouraging to see that amendments have been brought forward to try and address what is a serious matter where we are falling behind our colleagues south of the border. So I'm happy to support the Government amendments. Minister, do you wish to wind up on this group? Okay, in that case, Jenny Mara, do you wish to wind up on Amendment 20A and indicate if you are going to press or withdraw?
Just to press, Convener.
Press, okay, thank you. In that case, the question is Amendment 20A be agreed to. Are we all agreed?
No. Okay,
there will be a division. Those in favour of 20A, please show. 1, 2, 3. Those against? 6. That is defeated. Minister, can you indicate if you're going to press or withdraw Amendment 20?
Press.
Thank you. The question is Amendment 20 be agreed to. Are we all agreed?
Yes.
We are agreed. Now call Amendment 73 in the name of Margaret McDougall, already debated, with Amendment 20. And I'd ask Jenny Mara to indicate if she's going to move or not move. Moved. Thank you. The question is Amendment 73 be agreed to. Are we all agreed?
No.
Okay, we're not agreed. There will be a division. Those in favour of Amendment 73, please show. 1, 2, 3. Those against? 6. Okay, the question is that sorry again. The question is that sections 13 and 14 be agreed to. Are we all agreed?
Yes.
We are agreed. Now we'll call Amendment 70 in the name of Margaret McDougall, already debated, with Amendment 67. And I ask Jenny Mara to indicate if she's going to move or not move that. That is moved. The question is Amendment 70 be agreed to. Are we all agreed?
No.
We're not agreed. There will be a division. Those in favour of Amendment 70, please indicate. 1, 2, 3. Those against, please indicate. 6. That is defeated. Okay. I now call Amendment 21 in the name of the Minister, already debated, with Amendment 72. Sorry, I've got ahead of myself. My apologies. I need to put the question on Section 15. Is Section 15 agreed?
Yes.
We are all agreed. Thank you. I now call Amendment 21 in the name of the Minister, already debated, with Amendment 72. I invite the Minister to move formally.
Move formally.
Thank you. I now call Amendment 21A in the name of Margaret McDougall, already debated, with Amendment 20. I ask Jenny Mara to move or not move.
Moved.
That's moved. The question is Amendment 21A be agreed to. Are we all agreed?
No.
We are not agreed. There will be a division. And those in favour of Amendment 21A, please indicate. 3. Those against? 6. That is defeated. The question is Amendment 21 be agreed to. Are we all agreed?
Yes.
We are agreed. I now call Amendment 74 in the name of Margaret McDougall, already debated, with Amendment 20. Jenny Mara to move or not move.
Moved.
Thank you. The question is Amendment 74 be agreed to. Are we all agreed?
No.
We're not agreed. There will be a division. Those in favour of Amendment 74, please show. That's 3. Those against, please show. That's 6. That is defeated. I now call Amendments 22, 23 and 24, all in the name of the Minister and all previously debated, and I invite the Minister to move Amendments 22 to 24 en bloc. Thank you. Does any member object to a single question being put on Amendments 22 to 24? In that case, the question is Amendments 22 to 24 are agreed. Are we all agreed?
Yes.
We are agreed. I now call Amendment 71 in the name of Jenny Mara, already debated, with Amendment 72. Jenny Mara to move or not move?
Moved.
Thank you. The question is Amendment 71 be agreed to. Are we all agreed?
No.
We are not agreed. There will be a division. Those in favour of Amendment 71, please show. 3. Those against, please show. 6. That is defeated. I now put the question on Section 16. Are we all agreed on Section 16?
Yes.
We are agreed. Thank you. And the question is that Section 17 be agreed. Are we all agreed? We are agreed. Moving on to Section 18, I call Amendments 25 to 29, all in the name of the Minister and all previously debated. I invite the Minister to move Amendments 25 to 29 en bloc.
Moved en bloc.
Thank you. Does any member object to a single question being put on Amendments 25 to 29? In that case, the question is Amendments 25 to 29 are agreed to. Are we all agreed?
Yes.
We are agreed. I now call Amendment 30 in the name of the Minister, already debated, with Amendment 72. And I would remind members that Amendments 30 and 75 are direct alternatives, and I invite the Minister to move formally.
Move formally.
Thank you. The question is Amendment 30 be agreed to. Are we all agreed?
Yes.
We are all agreed. I now call Amendment 75 in the name of Jenny Mara, already debated, with Amendment 72. Jenny Mara to move or not move?
Moved.
Not moved. Thank you. The question is Amendment 75 be agreed to. No, sorry, no, that's not right. Not moved. And I call Amendment 31 in the name of the Minister, already debated, with Amendment 72. Minister to move formally.
Move formally.
Thank you. The question is Amendment 31 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is Section 18 be agreed to. Are we all agreed? Yes. Thank you. The question is Section 19 be agreed to. Are we all agreed? Thank you. I would suggest, before we move to the next grouping, we have a 5-minute break. Thank you. Okay, if we can reconvene. We're now on grouping number 8, section 20. And I call amendment 32 in the name of the Minister. Group with the other amendments as shown in the groupings. I will point out that sections 40 and 40, amendments 40 and 43 in this group are preempted respectively by amendments 79 and 81 in the group, headed removal of interim recall of sequestration. I invite the Minister to move amendment 32 and speak to all amendments in the group.
These 17 amendments are minor and technical. They address points made by the Delegated Powers Committee, Scottish Law Commission, the Law Society and ICAS. The amendments will ensure the legislation reads and has effect accurately. I move amendment 32.
Minister, does any member wish to speak in this grouping? If not, the question is amendment 32 be agreed to. Are we all agreed? Yes. We are agreed, thank you. I now call amendments 76, 33 and 77, all in the name of the Minister and all previously debated. And I invite the Minister to move amendments 76, 33 and 77 en bloc.
So moved.
Thank you. Does any member object to a single question being put on amendments 76, 33 and 77? If not, the question is amendments 76, 33 and 77 be agreed to. Are we all agreed? Yes. We are agreed. Now move on to the next grouping on records, and I call amendment 34. Oh, sorry, my apologies. I've missed out the question that amendment section 20. Sorry, the question is section 20 be agreed to. Are we all agreed? Yes. We are agreed. Thank you. Moving on to the next grouping on records, I call amendment 34 in the name of the Minister. Group with amendments 35, 36, 37 and 38. And I ask the Minister to move amendment 34 and speak to the other amendments in the group.
With the specification of documents held in the Register of Insolvencies, they remove the provision for the Sedernt book to be contained on the register. The Register of Insolvencies is a statutory register which holds details of insolvencies of individuals and businesses in Scotland. It is held in electronic format and maintained by the AIB. The bill originally proposed the AIB would make available the Sedernt book, the file of key documents relating to a bankruptcy, through the register. Having considered further the issues associated with this, we do not now believe this is appropriate, mainly due to data protection considerations. The amendments protect the duty of the IB to make available to interested parties the Sedernt book in electronic format, subject to suitable safeguards, and prevents sensitive case information being published on a public register. I ask for the committee's support and move amendment 34.
Thank you. Do any members wish to speak on this grouping? If not, we'll put the question that amendment 34 be agreed to. Are we all agreed? Yes. We are agreed. The question is, section 21 be agreed to. Are we all agreed? Yes. Thank you. We are agreed. I now call amendments 35 to 38, all in the name of the Minister and all previously debated. I invite the Minister to move amendments 35 to 38 en bloc.
So moved.
Thank you. Does any member object to a single question being put on amendments 35 to 38? No. In that case, the question is amendments 35 to 38 are agreed to. Are we all agreed? Yes. Thank you. We are agreed. The question is that section 22 be agreed to. Are we all agreed? Yes. Thank you. We are agreed. I now call amendment 39 in the name of the Minister, already debated with amendment 72. I would remind members that if amendment 39 is agreed to, I cannot then call amendment 78, which is preempted. And I invite the Minister to move amendment 39 formally. Thank you. The question is amendment 39 be agreed to. Are we all agreed? Yes. Thank you. We are agreed. So amendment 78 is preempted. Question is schedule 2 be agreed to. Are we all agreed? Yes. Thank you. We are agreed. The question is that sections 23 and 24 be agreed to. Are we all agreed? Yes. We are agreed. Moving on to the next grouping on removal of interim recall of sequestration. I call amendment 79 in the name of Hanzala Malik, grouped with amendments 80 to 90. I would remind members that if amendments 79 and 81 in this group are agreed to, I cannot then call amendments 40 and 43 previously debated in the group on minor and technical provisions as they are preempted. And I would ask Hanzala Malik to move amendment 79 and speak to all amendments in this group. Hanzala.
Thank you, Chair. I would like to move amendment 79. This amendment and the rest of in the group are probing amendments. I feel that this is not adequately discussed at committee, especially as the Law Society and the Minister is a member of, and the Institute for Chartered Accountants have said, the concept is fundamentally flawed. Either a person is sequestrated or they are not. I would like to ask the Minister to clarify what the purpose of interim recall of bankruptcy is.
Thank you, Mr. Malik. Does any other member wish to speak on this grouping? If not, I'll go to the Minister.
Thank you, Convener. I'm pleased this matter has come before us at stage 2 because I think it offers an additional opportunity to improve the bill. I understand that the amendments which Mr Malik has lodged are also supported by the Law Society of Scotland, who circulated drafts to members and to my officials last week. Indeed, I had a useful and positive discussion with Michael Clancy of the Law Society last Tuesday, on the 14th of January, and I understand my officials have had further discussions with colleagues from the Law Society since then. Having had these discussions and taken another look at this provision, the Government sees merit in some of the Law Society's arguments and is, in principle, content to drop its proposal for an interim recall of sequestration to respond to Mr Malik's admirably succinct presentation. There are still some practical operational matters to be ironed out. For example, how the trustees' remuneration is fixed, how we can make sure that the AIB has the right information to ensure that debts are in fact paid, and around the risk that recall on the sole basis that the debtors paid all that they owe will be unable to account for late notification of expenses and outlays after the debtor has paid, but before the trustee has been able to distribute the funds. These are all very practical but nonetheless important matters that to which further consideration must be given. For these reasons, I'm not able simply to accept Mr Malik's amendments at this stage. I would like to ask for an opportunity to take this matter away so that my officials can ensure that the final process will meet all these operational requirements, and in order, Convener, to bring forward Scottish Government amendments at stage 3. But to be clear, our proposals will not include an award of interim recall. They will be based on recall once the debt and any expenses to the trustee has been paid. I understand the Law Society are aware of our proposed approach. I hope this will be sufficient assurance for Mr Malik to be content not to press these amendments on the basis that we will deliver the change that I believe he is seeking at stage 3.
Thank you, Minister. Mr Malik, you didn't, in fact, in your opening remarks, move your amendment, and I asked you if you would just move that formally.
Move,
and then if you can respond to the Minister and indicate whether you're going to press or withdraw.
Yes, I'm very pleased with the response by the Minister. The fact that he's undertaking to possibly redraft the section, and under those circumstances, I'm happy to withdraw my amendment at this stage.
Thank you. Are members content to see that withdrawn? Thank you. Okay. I next call Amendment 40 in the name of the Minister. Already debated with Amendment 32. Minister to move formally.
Move formally.
The question is Amendment 40 be agreed to. Are we all agreed? Yes. We are agreed. Thank you. The question is the question is Section 25 be agreed to. Are we all agreed? Yes. Thank you. We are agreed. I now call Amendment 41 in the name of the Minister. Already debated with Amendment 32. Minister to move formally.
Move formally.
Thank you. The question is Amendment 41 be agreed to. Are we all agreed? Yes. Thank you. We are agreed. I now call Amendment 42 in the name of the Minister. Already debated with Amendment 32. Minister to move formally.
Move formally.
Thank you. The question is Amendment 42 be agreed to. Are we all agreed? Yes. We are agreed. I now call Amendment 80 in the name of Hansala Malik. Already debated with Amendment 79. Hansala Malik to move or not move?
Not moved.
Not moved. Thank you. And I call Amendment 81 in the name of Hansala Malik. Already debated with Amendment 79. And I'll remind members that if Amendment 81 is agreed to, I cannot then call Amendment 43. Hansala Malik to move or not move? Not moved. Thank you. I now call Amendment 43 in the name of the Minister. Yes. Already debated with Amendment 32. Minister to move formally.
Move formally.
Thank you. The question is Amendment 43 be agreed to. Are we all agreed? Yes. We are agreed. And I call Amendment 82 in the name of Hansala Malik. Already debated with Amendment 79. Hansala Malik to move or not move? Not moved. Thank you. Okay, I now call Amendment 83 in the name of Hansala Malik. Already debated with Amendment 79. Hansala Malik to move or not move? Not moved. I now call Amendment 84 in the name of Hanzala Malik, already debated with Amendment 79. Hanzala Malik to move or not move?
Not move.
Not moved. Thank you. I can now call Amendment 85 in the name of Hanzala Malik. Hanzala Malik to move or not move? Not move. Thank you. And I call Amendment 86 in the name of Hanzala Malik. Hanzala Malik to move or not move?
Not move.
Not move. Thank you. And I call Amendment 87 in the name of Hanzala Malik. Hanzala Malik to move or not move?
Not move.
Not move. And now call Amendment 88 in the name of Hanzala Malik. Hanzala Malik to move or not move?
Not move.
Not move. And now call Amendment 89 in the name of Hanzala Malik. Hanzala Malik to move or not move?
Not move.
Not move. And now call Amendment 90 in the name of Hanzala Malik. Hanzala Malik to move or not move?
Not move.
Not move. Okay, the question is therefore is that Section 26 be agreed to. Are we all agreed? Thank you. The question is that Section 27 be agreed to. Are we all agreed? Thank you. I now call Amendment 44 in the name of the Minister, already debated with Amendment 32. Minister to move formally.
Move formally.
Thank you. The question is that Amendment 44 be agreed to. Are we all agreed? We are agreed. Thank you. The question is that Section 28 be agreed to. Are we all agreed? Yes. Thank you. Now moving on to the next grouping on the accountant and bankruptcy referrals to court, and I call Amendment 45 in name of the Minister, group with Amendments 46 and 56, and I invite the Minister to move Amendment 45 and speak to all amendments in the group.
Thank you, Convener. I recognise there have been concerns expressed about the proposed transfer of certain functions from the Sheriff Court to the AIB. I'd like to remind the committee there is currently duplication of effort between the courts and the AIB. Our proposals in the bill are designed to minimise duplication and to assist with our aims of effective and efficient government. The important point here is that the rights of parties can be tested in a court with full jurisdiction where necessary. There are rights of recourse to the courts in relation to all matters. AIB staff are well placed to deal with the new decision-making functions, experience which has been built up over the last decade, and their handling of debtor applications for bankruptcy previously for the court is of course relevant. But I'm mindful of the views expressed during stage one about making sure we've got the right processes. I'm pleased, therefore, to bring forward amendments 45, 46 and 56, together with Amendment 10 already debated, and amendments 47 to 50, to which I will speak soon, respond to concerns expressed by the Law Society and the Sheriffs Association, amongst others. I believe what we now propose will go some way to addressing the concerns raised. Amendments 45, 46 and 56 allow the AIB to refer matters relating to the removal of a trustee, relating to the contractual powers of the trustee, and the valuation of contingent debts to the Sheriff. Power to seek a direction from the Sheriff on these matters will ensure there is no barrier to judicial decision-making in complex or legal cases when required. I therefore invite the committee to support these amendments and to move Amendment 45.
Minister, does any member wish to speak on these amendments? Could I maybe ask you one point, Minister, related to this grouping on the subject of the potential conflict of interest in terms of the accountant and bankruptcy reviewing her own decisions. When the committee considered this at stage one, in our committee report, we recommended that the Scottish Government seeks the views of organisations, including ICAS and R3, on steps that might be appropriate to negate these conflicts of interest. That's in paragraph 55 of our committee report. When I met ICAS and R3 yesterday, they told me that they'd had no contact from the Scottish Government in terms of a meeting. I wonder if that's something you could explain and perhaps progress if that's not happened already.
Well, as you know, Convener, we engage regularly with ICAS. I must admit I can't recall a specific request from ICAS to engage and discuss this, but I will put that right after this session today. I will write to ICAS and state that if they wish a meeting with me to discuss these matters, then they will be entitled to such a meeting. I mean, I'm extremely concerned to make sure that all the main stakeholders have open-door access to me, as has been the case, and that's rightly so, because we work together to make sure that the bill provides effective remedies for all of the individuals involved. I think there's 2 points I think perhaps I could just make, since you've quite reasonably raised the issue of principle of conflict of interest. First of all, ICAS themselves have a range of duties, as do the Law Society, and these duties perhaps sometimes may be perceived by some of the members to conflict. In relation to ICAS, they have their own supervisory functions when asked to review disciplinary decisions, for example, and the review is carried out by an internal committee, not by an independent body. So I think ICAS are not unacquainted with the issue of conflict of interest, but they resolve it, as do the Law Society, as do the Accountant of Bankruptcy. And the second point I make is that, and this is really, I think, the important paramount point, the paramount principle, is that whilst the Accountant of Bankruptcy will deal with more matters where there is an issue in dispute, in general, there will always be a right of appeal to the court. If the debtor is dissatisfied with the decision of the Accountant of Bankruptcy, the position that the Accountant of Bankruptcy takes regarding any matter, the fundamental point, Convener, is that that debtor, that individual, has the right of all individuals to take his or her dispute to the courts. That is the paramount point, and my instruction to my officials has been to ensure that that paramount principle is embodied and fully expressed in this bill. And therefore I'm determined to make sure that that is the case. I believe it's the case at the current time, but of course I'm happy to engage with all stakeholders to make sure that that in fact is not only the case, but is agreed to be the case by everybody else involved.
Thank you for that, Minister. Okay, in that case, the question is Amendment 45 be agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. The question is Section 29 be agreed to. Are we all agreed?
Yes.
We are agreed. I now call Amendment 46 in the name of the Minister, already debated with Amendment 45. Minister, to move formally.
Move formally.
Thank you. The question is Amendment 46 be agreed to. Are we all agreed?
Yes.
We are agreed. Thank you. The question is now that Section 30 be agreed to. Are we all agreed?
Yes.
We are agreed. Okay, we move on to the next grouping on bankruptcy restriction orders. And I call Amendment 47 in the name of the Minister, group with Amendments 48, 49 and 50. And I'd invite the Minister to move Amendment 47 and speak to all amendments in the group.
There was discussion at stage 1 about the various functions the bill will transfer to the IB from the Sheriff. Responsibility for making bankruptcy restriction orders is one example. This was not without an element of contention, but I think we were able to make good arguments why this is the right approach in practice. I think it's appropriate for the IB to make decisions about BROs. The IB has the existing supervisory capacity, not to mention, Convener, the experience and practical knowledge on the matter of a trustee's statutory duties, which means that the IB staff are well qualified to gather the appropriate evidence and come to a decision. The IB is also an officer of the court and has been making decisions on matters previously dealt with by the courts for some time. In 2008, the Bankruptcy and Diligence Scotland Act 2007 made significant changes to transfer debtor petitions from the courts to the IB. That, I think, has been a success. The making of a BRO is subject to appeal to the courts, as I opined a moment ago. On that front, the Scottish Government is mindful of the Committee's view and stakeholder feedback that the legislation must provide a fair and just process which must be and seen to be at the core of the decision-making process. These amendments restore the ability of the debtor affected by the BRO to challenge the IB's imposition of the BRO at any time during the period for which the BRO is imposed, and that can be appealed to the Sheriff. This is subject to the ability of the Sheriff only to limit the time when such a challenge may be brought to avoid abuse of process. In addition, the amendments remove duplication in the procedures, which was a matter that stakeholders also raised. Therefore, Convener, I urge members to support these Scottish Government amendments, and I move Amendment 47.
Does any member wish to speak on this group of amendments? If not, I'll just put the question. The question is Amendment 47 be agreed to. Are we all agreed? Yes. We are agreed. I call Amendments 48, 49 and 50, all in the name of the Minister and all previously debated. And I would invite the Minister to move Amendments 48 to 50 en bloc.
Moved en bloc.
Thank you. Does any member object to a single question being put on Amendments 48 to 50? Nope. In that case, the question is Amendments 48 to 50 are agreed to. Are we all agreed?
Yes.
We are agreed. Thank you. The next question is that section 31 be agreed to. Are we all agreed?
Yes.
We are agreed. The next question is that section 32 be agreed to. Are we all agreed?
Yes.
We are agreed. Thank you. I now call amendments 51 to 54, all in the name of the Minister and all previously debated. And invite the Minister to move amendments 51 to 54 en bloc.
So moved.
Thank you. Does any member object to a single question being put on amendments 51 to 54? In that case, the question is amendments 51 to 54 are agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. The question is that section 33 be agreed to. Are we all agreed? Yes. We are agreed. I now call amendment 55 in the name of the Minister, already debated, with amendment 72. Minister to move formally. Thank you. The question is amendment 55 be agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. The question is that section 34 be agreed to. Are we all agreed?
Yes.
We are agreed. I now call amendment 56 in the name of the Minister, already debated, with amendment 45. Minister to move formally.
Move formally.
Thank you. The question is amendment 56 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is that section 35 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is that sections 36 to 45 be agreed to. Are we all agreed?
Yes.
We are agreed. I now call amendment 91 in the name of Jenny Mara, already debated, with amendment 72. Jenny Mara to move or not move?
Not moved.
Not move. Thank you. The question is that section 46 be agreed to. Are we all agreed?
Yes.
Agreed. The question is that sections 37 and 48 be agreed to. Yeah. Sorry, the question is that sections 47 and 48 be agreed to. Are we all agreed?
Yes.
We are agreed. Thank you. Now we move on to the next grouping on debt arrangement schemes, extension to non-natural persons and procedures. I call amendment 57 in the name of the Minister, group with amendment 65. Ask the Minister to move amendment 57 and speak to both amendments in the group.
Thank you, Convener. Committee members will be aware of the success of the debt arrangement scheme, which supports individuals and couples to pay back their debts in full over a longer period of time. As part of our financial NHS proposal, we have proposed that DAS should be available to a wider group, specifically business partnerships where these are non-limited liability partnerships. This is something that Mr Mackenzie has raised with me on several occasions. Amendment 57 puts in place powers required to allow regulations to be laid later this year in respect of a business DAS solution, including clearer provisions to allow controls on the remuneration of money advisors acting in relation to DAS. Amendment 65 puts in place provision requiring the affirmative procedure to be used in relation to these new powers. Until our 2011 changes to DAS, it was available exclusively through money advisors in the third sector who did not charge for their services. One of the main aims of the 2011 regulations was to widen access to DAS, ensuring that those who wanted access to access it could do so through an approved money advisor. We therefore took the decision to allow qualified insolvency practitioners to offer DAS as well as offering insolvency solutions. DAS has grown significantly as a result of this decision, but new challenges, Convener, have emerged. Although DAS itself is free to access, some insolvency practitioners are charging significant fees for their advice in respect of DAS and for the ongoing management of the debt payment programme. I know of one case where fees of at least £3,000 have been charged for advice. This is hard to justify. This amendment will support consideration of arrangements for fees at a later date. Amendment 65 also implements a recommendation of the Delegated Powers and Law Reform Committee requiring regulations specifying the common financial tool for the purposes of DAS to be subject to affirmative procedure in line with the procedure for those regulations under the 1985 Act. I therefore ask for the committee's support for these amendments and I move Amendment 57.
Okay, thank you. Minister, does any member wish to speak on this grouping? If not, perhaps I could just seek clarity on one point, Minister, on this. I appreciate your clarification that this will apply to business partnerships. I'm just asking if there are any other non-natural persons that would be caught by this particular measure other than business partnerships? Words non-natural persons, I imagine robots or androids in my head. I'm sure that's not what you're referring to.
Well, I think, as they say in the courts, at least in television in the USA, we will take that under advisement. And I think perhaps it would be sensible to write to you in this matter. And the intention, I think, is really to extend DAS available to anyone who may benefit therefrom. And plainly, business non-liability partnerships are an obvious extension, which will have practical effect. But we will look very carefully at your very sensible, albeit somewhat technical point, Convener, and write to you in due course.
I appreciate that. Okay, nobody else wishes to contribute. And Minister, if you have nothing to add, we can put the question. The question is Amendment 57 be agreed to. Are we all agreed? Yes. We are agreed. Thank you. The question is that sections 49 to 51 be agreed to. Are we all agreed? Yes. We are agreed. Thank you. Now I call Amendment 58 in the name of the Minister, already debated with Amendment 68. Minister to move formally.
Formally moved.
Thank you. The question is Amendment 58 be agreed to. Are we all agreed? Yes. We are agreed. Move on to the next grouping on voluntary sequestration for partnerships. I call Amendment 59 in the name of the Minister in a group on its own, and I'd invite the Minister to move and speak to the amendment.
Thank you, Convener. I think we're in the home stretch and the finishing line is now in sight. This is a minor amendment, but one which I think is helpful. It has been proposed by a former insolvency practitioner and has been supported by both ICAS and R3, the insolvency trade body. It relates to the process by which a partnership can apply for sequestration. Currently, partnerships can only apply for bankruptcy of the partnership if they have the concurrence of a qualified creditor. This is at odds with a sole trader company who can apply for bankruptcy without the support of creditors. I consider that making this amendment will ensure debt relief is available to partnerships without placing an additional burden on them to secure support of creditors, and therefore I move Amendment 59.
Does a member wish to speak on this grouping? If not, I will just put the question. The question is Amendment 59 be agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. Now call Amendment 92 in the name of Jenny Mara, already debated with Amendment 72. Jenny Mara to move or not move? Not moved. Thank you. Now call Amendment 93 in the name of Jenny Mara, again already debated with Amendment 72. Jenny Mara to move or not move? Not moved. Now call Amendment 94 in the name of Jenny Mara, already debated. Jenny Mara to move or not move?
Not moved.
Not moved. And I call Amendment 60 in the name of the Minister, already debated with Amendment 32. Minister to move formally.
Move formally.
Thank you. The question is Amendment 60 be agreed to. Are we all agreed? Thank you. We are agreed. And I call Amendment 95 in the name of Jenny Mara, already debated with Amendment 72. Jenny Mara to move or not move? Not moved. And I call Amendments 61 to 65, all in the name of the Minister and all previously debated, and invite the Minister to move Amendments 61 to 65 en bloc.
So moved.
Thank you. Does any member object to a single question being put on Amendments 61 to 65? No. In that case, the question is Amendments 61 to 65 are agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. The question now is that Schedule 3 be agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. And I call Amendment 66 in the name of the Minister, already debated with Amendment 20, and invite the Minister to move formally.
Formally.
Thank you. The question is Amendment 66 be agreed to. Are we all agreed?
Yes.
We are agreed. The question is that Schedule 4 be agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. And finally, the question is that Sections 52 and 53 and the long title be agreed to. Are we all agreed?
Yes.
Thank you. We are agreed. That concludes Stage 2 of the Bankruptcy and Debt Advice Scotland Bill. I am grateful to members for their assistance and to the Minister and for his officials for coming along. Members should note that the bill will now be reprinted as amended and will be available in print and on the web tomorrow morning. The Parliament has not yet determined when Stage 3 will take place, but members can now lodge Stage 3 amendments at any time with the legislation team clerks. Members will be informed of the deadline for amendments once it has been determined. Thank you, and at this point we will have a short suspension. Right, if we can reconvene, we're still in public session, just remind members. We're on item 3 on the agenda, and we have a public bodies consent, a motion to consider. This is in relation to the public bodies bracket abolition of National Consumer Council and transfer of the Office of Fair Trading's functions in relation to state agents, etc. Close bracket order 2014. As members might be aware, the background to this is the abolition of the National Consumer Council, and what will be happening is that its functions will be transferred to the Citizens Advice Service, both south of the border and in Scotland, and also certain functions currently exercised by the Office of Fair Trading being transferred to Citizens Advice Scotland as from 1st April 2014. It appears to be reasonably straightforward. As members will have seen, we've had a letter in from Citizens Advice Scotland welcoming this motion and asking for support. Happy to hear if any members have any issues or comments they wish to make in relation to this. If not, I take it there is general consent to this, in which case I would ask first that the committee agrees to recommend to Parliament that the draft motion that the forthcoming public body consent memorandum be approved, be recommended to Parliament by us. People content with that? Thank you. And secondly, are members happy to convey to the convener and clerk the drafting and publication of a short factual report setting out the committee's deliberations and decisions? You all agreed with that? Thank you very much. And at this point, we move into private session.